Welcome to another video. Good morning, good afternoon, good evening. I am making this recording on the 1st of May, so it's a beautiful new month. Also, it's a very important time to reflect on past and previous swing trades. If you're still in a couple of trades, you want to go back to your monthly time frame. Every beginning of every new month, go back to your monthly time frame, see how the previous month closed, see if a new order block, a new supply or demand was created, see if your analysis is still standing the test of time, who is in control, etc., etc. And it just so happens that today's asset, I need to make such a decision. We didn't really go through this type of asset in the warrants last year. That's why I really want to go through my entire list of 109 assets with you, going through them one by one. This is the type of work, by the way, I'm doing intensively between December and January every year. But because I was on a very, very long, very much important break, I didn't get a chance to do that. And I'm doing that with you right now together so that you can actually learn how to do these things and see what I see. So this is called the EURPLN multi. I just call it the EURPLN currency right there. And it's a clean. I'm currently in a clean trade, just so you know, and I guess importantly, here's the real snapshot of my real account. Now go right. So you can see, that there's really there's all these weird assets, that you can just trade supply and demand with and this one particularly, the EURPLN. I'm pretty sure I got triggered only sometime this year. Most of this analysis was done last year, by the way. And all I had to do was just wait for price to get to where it is exactly that I am going, or wait for price to come back. So I'm just going to jump straight to the daily time frame so you can see for yourself, the entry point. Okay, let's start off on the monthly time frame. Just to explain why I took this beautiful trade, right? Markets. You can't see it until you zoom in. I zoom in like 4 or 5 times last year. But when this candlestick closed, right, the October 22 candlestick closed, you can see that the red actually involves the green. So markets create a new supply in October. I definitely missed this entry here. All right, so I thought nothing of it. Once in a while, you'll sometimes miss fresh touches. Try not to miss a fresh touch. By the way, fresh touches are the safest. But our trading strategy on multiple time frame analysis teaches us that retests actually run longer. They might carry slightly more risk, but they run longer. So I waited for the retest into price, and that clearly came this year, right? So I had a pending order just sitting there. I'll show you what it looks like on the weekly time frame. This is the fresh touch that I missed. All right, clean imbalances also on the weekly time frame, and you can see I waited for a better touch, and then you go on the daily time frame for the ultimate retest. And that happened in 2023. There we go. February 2023, and it was literally a cluster of daily demands inside the weekly demand, inside the governing demand. And this is the fresh touch I was talking about. Fresh touch runs into here. So I mark where that pullback starts to land, and then we build up liquidity to the upside. When you build up liquidity to the upside, you gotta take out all these beautiful buyers. All the retail traders were trying to buy here. Any supply and demand traders who forget our rules that you cannot take a daily demand against a monthly supply, all those people get liquidated, and today is a new month. And I noticed that I am now at a very big interesting part of price here, a long-term psychological uptrend, right? That's been held together by some type of bullish order blocks all the way from June 2020, right? So the creation of this zone held price up, price kept going, new bullish order block, price broke this order block, right, but fell into the trend line. Trend that's quite significant. And now I have to decide for myself, well, what's price going to do? Is price going to break this trend line and go to the downside? It's a new candlestick, it's the new month of May. or a market's going to respect the trend line and go back up, right? We don't take trend lines as areas of trading. We take trend lines as tools at 365. It's a confirmation tool. For me to make a decision on what to trade, I need to see my supply and demand. There's no real demand here on the governing time frame. I don't want to lie to you. There's no real demand, right? There's this area show, but there's really no real demand, right? So as a betting man, I would say maybe price will eventually break through this trend line. But as a swing trader who's been in price since about February, right? So I'm looking at, February, March, April, about 3 good months, right? 1 to 8. Obviously, it's probably a good idea for me to take profit, unless if I am pretty sure that price will gouge to the downside. If price was to gouge to the downside, then the other decision I need to make today for the New York session is to decide how far up price could retrace on the daily time frame. So you're going to use this supply, then use this supply. And the best way to do that is to draw your swing high, swing low. It's a very swing high, swing low. Using a downward Fibonacci, draw it like that, right? And that's what I will do in the New York session this afternoon. And I'm looking at my golden ratios, and I'm trying to see how valid my areas of value are. You can see price has already made a very big return, right? We already tried to use that retracement zone. And so now it's either the fresh areas of value, which are PCPs, are the ones that are going to be used. And every single day I wait on the swing trade, right? I start losing profits. Profits that I've held for a very long time. So I could wait for price to retrace all the way up there, and not for price to come back down. I could wait for price to come back all the way up there, wait for price to come back down. Markets could decide that because the retracement has been used, the only fresh available touch is all the way up there. All right? And if that's the case, which is what I'm seeing right now with all these probabilities and scenarios, I'm always going to choose the highest supply 9 out of 10 times. Sometimes it means price leaves me behind. And so after I'm done with this video, just so you know, I'm definitely, it's only like 7:30 in the morning. London session hasn't even started. But after I'm done with this video, I am definitely going to close this beautiful trade I've had, keep all this money to myself, and then open a new supply sell order up here. I would very much rather re-enter price at a premium place than gamble with profits I've been babysitting for almost 3 months. Okay, and that's just how I think about all my swings. It's just a clean swing. I definitely don't see price having power to come back all the way to a government supply, so we're there. But retracement in a new month, very, very possible. Very, very possible. So I would rather wait to see how price reacts in these areas, right? Maybe market stop here and turn it up me, such as like I've already gotten a good bag here, right? And I don't want to hold the bag in case price goes all the way there, this 50% of this, and I have to wait another 2 to 3 months to get back to 1 to 8, let alone more. But close this today, and then start setting up new sell orders up here. That's the biggest imbalance. That's the golden ratio is already being used once. The golden ratio, by the way, can be used twice sometimes. It just depends on the order block, right? But I'm going to go for a premium sell and wait for that, right? So I hope that's clear. And I'm sorry I did this chart this way. I think it's very because I'm actually active in price. But let's do a proper analysis. And once again, you'll notice that some of these currency pairs are not with your newer brokers, right? So you want to go with a reliable broker. I always recommend Arbitrate. The link is below if you want to open an Arbitrate. They've got everything. They've got all sorts of really cool stuff that trades in a very interesting way, right? So this is all the analysis. Actually, it's very interesting analysis, right? Because you can see the euro Polish pair is very known for long wicks, number one. Number two, technically speaking, last year we opened the heavens, right? So you can see the zone here has got a red line, red and yellow. Red means, class effect is already upon us, right? When the price really dug through this area of value, we knew it was only a matter of time for this place to break, right? And markets have done just that. Markets have done just that. What we don't know yet is how the year is going to end in 2023, because remember, this is the 12-month chart, which means one candlestick here represents 1 year, and however this year ends is interesting. We're in the month of April, and price has already equalized itself to the green candlestick of last year. So the green here, price is where price opens, the red opens at the top because you sell high and closes at the bottom. So our red candlestick is already here, right, where the green is, and we really don't know where the price is going to be on an active candlestick. But what happens if price involves, right? I mean, it's April, it's May right now. Sorry, the first day of the month of May. It's actually probably pretty interesting now, which makes sense now. It is like 7:30. Our stuff is not here. I completely forgot. Right. So, sorry, that was so random. Right. So you could get price pushing a little bit down for the whole year, right? The price could also push all the way back up, and that's why that trend line that we saw right now is very important, but it's early days, it's only May. Right? But if price does push down and say close over here, or close over there, or close over there, or close over here by December, then we've got a bearish engulfing candle, which means even though markets have opened up the gates and broken that previous supply that I showed you, technically speaking, markets have done that for now, created, of course, a classical new major turning point, maybe, right? If price does turn, but definitely markets have created a new weird supply with a massive long. So let's say price closes somewhere here. Let's say the attempt to close this week, really goes all the way down there. Then we've got a new supply to contend with for the next 2 to 3 years. So I just want to remove everything. Yeah, that's better. Right, so I'm not saying we have a new supply right now. I'm saying based on how this candlestick is going to close at the end of this year, if it does close any lower than it is right now, then we're going to get a new supply. We're going to get a bearish engulfment right here, and then we've got a whole new overall. If we could throw in some indicators, some MACDs and whatever else you guys need to read your charts, you would notice that, as much as price staggered along in places, very awkward long with areas of value, in the long run, markets are edging to the upside, right? In the long run, markets are really trying to edge to the upside. And so, this is a critical part of this price, but it means absolutely nothing, even if the supply is created, for it's most likely going to fall to make contact with this demand there, which means by the end of the year, the demand will be in control. If price was to keep falling, and that would mean buying for 2023, 2024. All right, so that's what we have on the 12-month chart. Okay, that's what we have on the 12-month chart. Let's now break this whole thing down. Let's move to the 3-month chart just to get like much more relative areas of value. Relative areas of value, one that we can actually trade, right? One that we can actually map out to see who is in charge, right? And you can see here, right? Some interesting, reaching out of wicks, equal highs, and then popped right there in 2022 last year. And now on the 3 months time frame, this is what I'm really interested in. So you see on the 12-month, that type of momentum is not yet reflected. But on the 3 months time frame, we definitely have a bearish engulfing pattern that started in the last financial quarter of 2022. This is the candlestick of October 2022. It's a 3-month chart, so that's October, November, December trading, led into some serious selling. And this is why I'm saying, it might be a good idea to hold on to my sells right now. But for the most part, I'd much more rather wait for price to retrace on a daily time frame and come to me. In terms of reflective immediate demand, this is what I can see. This is what I can see on the 3 months chart. And you've got all sorts of, internet activities, including, something there, but that doesn't look like a valid demand according to 365 rules. Anyways, the way we teach it, this is not something I'm remotely worried about. Right? Price for now is very parabolic. Will it just continue dropping like that? I don't know. As a person in a long-term sell, I want you to keep dropping like that, but you could get some consolidation. On a 3-month candlestick, you could get one strong green month. You never know. But this is the candlestick of April, right? You can see April, and then it's going to be part of May, and it's going to be June inside this candlestick. So we're still 2 months away to actually see how this candlestick closes, right? So we need something slightly more detailed, slightly more clear, and that is our governing time frame, right? Our governing time frame, you'll see now on my actual trading chart, the one that I showed you, or my analysis chart rather, you'll see I've got something that's running like this now, and that's just to map out a psychological area for price to see what the banks are most likely going to do. And I mean, I get the logic. I really feel like I'm closing my sell a little bit too early, but it's again not something I'm willing to babysit through another, because I'm already selling in an asset that generally long term is a tendency to open up. Markets are very choppy in this market, so price could retrace for a full month, and so I'll move, from I don't know how much am I on. I'll move from approximately whatever amount I'm on. There's no return for money, right? And then I'll lose about half of that for a whole month as price retraces. And then I have to wait another month or two to go back to where I am today, and then see price break out if markets decide to retrace. The other alternative in terms of probabilities is markets could just drop straight down the whole month of May, and I could make a bit more money on top. But like I say, I think I'm really good where I am right now in terms of price. I'm going to take profit today, and then I'm going to open sell positions. It's not all the time I decide like that, but assets that are very choppy like this, I generally stay grateful, right? Remember, as a trader, to remain consistently profitable in the game, you simply need a risk-to-reward ratio of 1:3 for every asset at a max, at a minimum, right? I'm rated on 1:9 in this trade, right? I'm not saying if there's price, if markets can give you 1:10, 1:20, absolutely take it. But take it in relation to, you are aware of where price is going, you are aware of what areas of value might combat, your profitability, right? And right now, I'm not liking this. Yes, if I draw the trend line a little bit more skimishly, it may appear as though markets have already opened on the other side of the trend line, right? And remember, if you draw it like this, you could tell yourself, no, but Leroy, it's fine. Markets are already open on the other side of the trend line, and that's fine. But this is a governing time frame. This whole red thing could become just a wick in 3 months, right? In 3 weeks, sorry, right? Because this candlestick that you're assessing or analyzing has not closed yet. You do not know how this candlestick is going to close until it has closed. If you draw it like that, then you might think, oh no, price is just sitting on the trend line. Remember, trend lines are just subjective lines, and they help us all make individual decisions in a very specific way. So I can't base my whole trading strategy just on mere trend line. It's a useful tool. Sorry about the cough, but I can't really, risk it all of that. Right? Let's see what we have in the time frame. I can start to make this line a little bit tighter, not looking at the close of the bodies of the candlesticks, but rather drawing it from wicks. And for me, you can already look at this weekly, very powerful to the downside, extremely overextended, in my humble opinion, right? Either price needs to consolidate, and so we get some sideways trading on the weekly time frame for the next 2 weeks, and we consolidate out of this trade line area. That's welcome. All markets need to just come back and retrace, and that's where we have our weekly supply. And that's one thing I didn't check earlier on when I do that daily supply, where I'll rather open price again. But I guarantee you that one daily supply that I say is fresh and is a premium supply, I guarantee you it's in this zone. All those other supplies on the weekly time frame are even confluence with the weekly time frame. And so when I look at structure on the weekly time frame and I'm looking at, this broke structure, this is the supply in charge of that. So why not just wait, or for you guys who are in, open your trade? So there we go. There's the structure break. There's that premium supply that I told you about. And you can see this is the golden ratio area that we drew earlier on. So price definitely could come to pounds here. If you want, you could have a smaller risk here in the event price does this, right? If you wanted to go in, but also accept the risk that you could be stopped out because there's a higher supply. We obviously don't like this type of activity in our areas of value. We like the drop. We don't like a long base like this. And too much trading in this area, but what are we going to do? It's what's in front of us, right? And then the next risk I want to take is somewhere there. If this is a good place to take profit for you, so be it. As long as it's 1, 2, 3. If markets, before they come out, give us an indication, right, that they're going to break the psychological trend line, then yeah, open gates. This could be my next big swing until the end of the year, right? So hope that made sense. I hope you enjoyed this video. Don't forget to like, share, subscribe. I'm trying to keep them short, succinct, and very clear asset by asset. As soon as I'm done with every single asset, then we're going to go back to our weekly orders. But already, I think I'm doing a good job of mapping out trading places. Right, so this was Euro Polish. I'm only in this trade, by the way, through second of yet. I got in unaware I was in, but I was not checking my charts in February, January, and the analysis is based on what I saw price do in October 2022. All right, so when the governing time in October 2022 gave me the green light to sell, that's all I was doing now. I was simply waiting, right? So you can see that my first sell is in here, and that's because through multiple time frame analysis, we were able to get in. We were able to get in here. That's the wick that you're looking at. And these are the daily areas of value. Fresh chart is the one that I missed. Retest definitely grabbed it and held onto it. Then I'm going to keep doing the same stuff. Every single time you see me doing an asset, the same strategy working in front of you. Check out the link down below if you want to know how to trade institutional supply and demand. Make money for yourself. Until then, I'll see you in the next video. Peace.